Hi everyone, good day to you. Great to be back with you. Life gets in the way sometimes, doesn't it? Sorry for being away for so long, but I'm back now and I'm going to be doing some videos for you. And I'm going to start by recording some live trading. Hopefully, I'm going to be trading on the Dow this afternoon. Market opens in a few minutes and I'm just going to do a roundup of the situation as it stands before I start trading and before the market opens, and then hopefully take some trades if the market is in the right position, which it looks as though coming up to the open it may be on a higher time frame chart anyway. So that should be interesting for you. Going to be trading with lower point size to start off with, and therefore lower risk to me. And you know, a £10 a point trade on the Dow with where it stands at the moment, you know, you're looking at having to fund an account of about 16,000, something like that, which if you're trading, you're obviously not going to lose all of that, because you'll only be able to lose a certain amount before your trading broker stops you from trading. So if you're new to trading, don't think I'm going to be risking £16,000, because I'm not, definitely not. I'm talking a few £100 probably maximum risk per trade, and with a similar, if not slightly higher, chance of making money. Okay, so risking a few £100 to make a bit more. And I take regular trades on short-term charts normally, and I use what's called a river of value. Now let me ask you, and you can answer using the comments if you want, how has your trading been going? Have you been looking at and practicing using the river of value, the EMAs? Have you been looking at that? Because I find it a very, very efficient system. I run what's called the gold system, Ant's Gold I call it, me being Ant. And yeah, I'm going to be using that this afternoon. So let's go straight to the charts and I'll talk you through the action. Okay, so here's the chart for the Dow, and we're approaching 2:30 in the UK, which is the open for today. And as you can see on the screen, I've got the master time frame and my trading time frame. This is the trading time frame, and I'll be trading and looking at these candlesticks here as they develop. Now, unusually for me, this is the 30-minute chart and this is the 2-hour chart, so this is a long time frame, and you can see there are 200 points between each of these numbers here, 200 points. So that's a large amount of points. And you know, when you're used to trading 1-minute time frames, when you've got 20 points in between, that's 10 times the value. And that's because it's a higher time frame chart, and they're just different in terms of the volatility, but they operate in exactly the same way as if I had the 1-minute chart and the 5-minute chart on here instead. So I'm looking at the same thing, and the gold system that I operate works for me on both, well, all time frames. So you know, I find it highly reliable, and that's why I trade it. Anyway, we've got the EMAs on here acting as the river of value, and you can see pre-market it was doing just that, bouncing up and bouncing down, and it does that on all time frames, and sometimes it goes through, and I have a method for working out when that is as well. So you can see here on the 30-minute chart that the market has gone up through the river of value, and then it's just come down in the last 30 minutes. So as we approach the open, this is where it stands, and I'll be looking, if the market opens at this value here, I'll be looking to go long. And the reason that I'll be looking to go long is because we've got a good candlestick pattern here. The market has gone up, gone through the EMA, pulled back down. This value level should operate as support, and therefore if the market opens here, I'll be entering just at support and the market should go up. Now, I'm bearing in mind what exit levels I might have. So for my loss exit, it would be this, just below this level here. And for my profit level, I'd be looking at exiting probably, if you can see it, imagine a horizontal line across these tops here at that level there. So that's what I'm looking at, and you're probably talking about a 3-to-1 reward to risk on this. So this is it's all set up perfectly. All I need to do is wait for the open and wait for the opening candle to go green, and then I'll be going long. And the reason that I'm looking at this higher time frame today is because I've looked at all of the lower time frames and there's a lot of inconsistency in the charts, and so no trade setups immediately there, nothing that appeals to me. Probably for the next 5 minutes there won't be anything on those charts. So because this is all set up perfectly, I'm happy to go ahead with this, and if it works out, then obviously it will have been a good decision for me, and if it doesn't work out, then I'll be surprised. But I'll be getting out at exactly the right level so that I don't, if the market all of a sudden zooms down, I'm going to be out. But if the market closes above the 80 EMA here, then that's a good sign. If it closes just below the 80 EMA, that's not a good sign, and that will be the determining factor on my trade. So let's wait for the open. Yeah, so the open's coming up in just a sec, and it looks like the market is going to close just above both of those EMAs. So that's perfect, because it means that the EMA river in this case will be acting as support for my trade, and that's just what I want. That's gone up a little bit higher than I wanted, but there we go. There. Right, we're long. So just got to wait now and see what happens. If it comes, don't forget, if it comes down here, I'm out for a loss, and I'll be looking to take profit up here somewhere. If it goes up there. It always, because I trade shorter term charts normally, I always wonder what's happening on the shorter term charts when I trade the longer term charts, especially on the open like this. And the market's coming down at the moment, and we'll see whether it bounces there. There's a bounce just there. Looking at the 2-hour chart, that's also a good looking chart for me, because the market closed above the EMAs, and so I'd expect it to go up. If it can just bounce from there, as it should do based on my calculations, then it'll be a good trade. So, how have you been? Yeah, how have you been? You can tell me. I hope things have been going well for you, and that you've been trading well and trading in a disciplined fashion. That's always the way forward. You know, if the market comes down here and I stay in, then I've broken my rules, and I never break my rules. And the reason I never break my rules, even though I still think if it comes down here it'll go back up, that's no good. That's not the trade. That isn't the trade. It isn't the risk associated with the trade that I wanted, and so that would be, that would be me breaking my rules. And I don't break the rules. I stick to the rules of my system, because I know that if I stick to the rules of my system, this system will make me some cash. So here we go, that's a better sign. And hopefully in a minute this candlestick's going to go green. At the moment it's hovering around break even, and if it goes green, that's going to be a good sign. That would have been an alternative entry going in there, but I like it as close as possible, my entries, to the EMAs, and I got it right on the EMA here, and so that's really good news. You can see the MACD indicators that I've got on here, standard values, blue line pointing up on the master time frame, blue line pointing up on the trading time frame. That last bar there, the last bar before the open, was a mini pullback bar, and mini pullback bars after a run of bull bars, mini pullback bars normally are met by resistance and, or in this case, support. And you can see here 1, 2, 3, 4 the bulls were winning. The bears forced the market down here, but it closed up here, this candlestick, and that is a buy candlestick, which is, you know, the trade that I took. And now it's looking much better. It's gone green. We've got £600 here based on £10 a point, so it's pretty good, isn't it? This is the value of trading a higher time frame, because, you know, if I was trading the 1 minute time frame, I may well have exited by now, but there's no reason to exit based on what I can see on this chart and where I wanted to exit. Now we're getting close. Now we're getting close. I might be thinking about exiting in a sec. We'll have to there we go. So that's a good start to the trading session, I'm sure you'll agree. And one of the good aspect here was, whilst you know, your heart flutters a little bit when the market came down here and it was approaching the exit level down here, but this bar here is a pin bar and it's crossing the EMAs, and that's a really good buy signal. So just going to have a look at the 1 and the 5 minute charts now, and here we go. So on the 5 minute chart, market obviously going up, pulling back, been looking for it to come back down here to take a trade. That's the master time frame. On the trading time frame, it's the same place down here, about 33125, something like that. Might be attractive for a buy trade. We'll have to wait and see. Ooh, there we go. Now, there. Perfect. Go on then. It delayed I couldn't see my entry. Oh, goodness. Anyway, that you could see it touch the river of value, just rejected up, and then that was my entry as soon as the next bar went green. Excellent. That'll do. Thank you. Right, okay, so 2 good trades to start the day. Now, little bit concerned by this candlestick here. Okay, yes, I went long there because all the signals were good. You know, the MACD lines all pointing up and above the river of value in terms of the price. But I won't be going long here because things have changed. MACD pointing down, MACD pointing down, and this could be a good sell trade in a minute. This was a very strong candlestick. I'm just checking out the candlesticks there. Right, got to wait for this price action to go back up to the river of value, and hopefully by then the blue will have crossed over the red line. 8 crossed over the 20. If it hasn't, it depends on what happens next. I suspect the next candle will be green to start off with, at least, because that's often what happens. I mentioned before, 3 red consecutive bars followed by quite often a pullback to the EMAs. There you go, they've crossed over now, and then once you've got a pullback to the EMAs, you've got a possible entry, and this will be an entry short on this occasion. So just wait a little bit on this one. That little bit of rejection there on the candlestick that's forming is interesting, and if I get anything similar on the next candlestick opening, that'll be a good entry short. Let's see what we get. Right, so 4 red candlesticks on the trot. And a good bit of rejection up there on the last candlestick, showing it the seller's intent to sell. Here we go. Right, now wait for the river of value there, and there we go. Short. Short. Okay. Seems like quite a good exit point here. There we go. £400. So 3 trades, 3 winners. How's that? Hope you enjoyed that. Well, you know, trading can look easy when you trade like this, but it takes a long time to get good at it and a lot of practice, and then you get your reward. You know, I'm getting my rewards at the moment, and this is a system that I'm very confident in. I teach it to other traders, and it works beautifully for me. When you see the signals, then you press the trigger, and that's, you know, that's what it is. And here's the next trade that I took this afternoon, and you can see the system working perfectly again just here, and you can see that I'm trading short, or I've traded short from the river of value. Same sort of thing, consistent downward pressure, several red bars on the trot, pull back to the river of value, and then short. The first pin bar in the river of value showed the intention of the sellers to sell, and then the price went back up to that level. I shorted there on the expectation that the sellers would sell again, and they did. And so, you know, that's four trades and 4 winners, and you've got to be happy with that. That'll be me done today. Anyway, hope you enjoyed that, and I hope you learned something from it. You know, it does take a long time to get good, and it can be really frustrating, this trading, when you first start. It can be really frustrating. Your brain doesn't really understand trading charts. You need a really good education, and I'm fortunate enough to know how to model successful people. I can do it in lots of different fields, and I chose to do it in trading, to model top traders. I coached them, I worked with them, I found out what they were doing, what they looked for, and I decided that I could do it myself. And so I went about doing it, and I devised this system, which I'm lucky to have. Anyway, that's that for today. Thanks ever so much for joining me. Any questions, let me know using the comment forms below, and I look forward to seeing you on the next video. Do subscribe if you haven't already. Thanks ever so much. More on the way. Cheers for now. Bye.